This is Edmund Shing from BCS Asset Management. Hello, today we're going to look at signals for the stock markets. Are they going to go down more or are they going to rebound? Looking at July first of all, oil prices did badly. We, however, are going to focus on the German DAX equity index, which did very badly as well because of its links to Russia. Here you can see the sharp fall in the DAX index at the top, but at the bottom you look at the relative strength indicator for the DAX, which is at oversold levels of 27, suggesting that a correction has been done and, if anything, a rebound is more likely. Over 2014, sovereign bonds have outperformed stock markets by quite some margin, particularly in Europe but also in the US. Now, what are the warning signals for stock markets that we see today? Firstly, people are very scared. The CNN Fear Greed Index is very much at extreme fear, at a lowest level since 2011. However, I would say that this is a positive for the stock markets in that whoever wanted to sell and was scared has already sold. The equity risk index from the UBS has fallen, but is much higher than in previous corrections. So for me, yes, it's fallen, but it's not as extreme as we've seen previously. You should not be that worried. However, high-yield corporate bond spreads have risen, and that to me is a sign to get out of US high-yield corporate bonds. So there, I think there is risk. And finally, if we look at financial conditions in the US, yes, they've weakened somewhat, but again, they're nowhere near the lows that we've seen either this year or last year. They're actually still in relatively good shape, considering. Small caps here on page 11 in black have vastly underperformed large caps by 6% in the year to date and are starting to rebound, and that suggests to me that they will lead large caps in the US higher going forwards. What are the positive signs that we're seeing for stock markets? Firstly, the US economy is positive, both in non-manufacturing and in manufacturing. We're seeing activity levels higher than we have seen since early 2011. The St. Louis Financial Fed Stress Index is still near record lows. Even our VIX indicator, comparing the short-term VIX to the 3-month VIX, has started to rebound, and that's a positive signal for stock markets, as in the worst of the risk has already been seen and it's actually improving. And this is the same for the put-call ratio in the US, as you can see, already falling back. No risk really to be seen in either the bond volatility index or the FX volatility index. They're both returning lower already. And finally, for sovereign bonds in Europe, we can see that risk here is still extremely low as measured by the CDS index from iTraxx. So no risk coming from European sovereign bonds. Now, if we skip to here and we can see these positive signals from the advanced decline line and 52-week highs versus 52-week lows, I would summarize all of this by saying that we already are in very good shape and the uptrends remain in place for stock markets. And remember here on page 21 that following market declines, it takes only 14 days to get to recovery. We see 6 days off the bottom and then 14 days to recover, and I think we already are starting that recovery period because the declines tend to happen very quickly. So to summarize, where are we going? Are we going lower or not? I think we're not. I think that, again, there is positive upside in general. I think we have seen the lows in the markets, and I think in summary, there's a greater chance of a market rebound than a further fall in stock markets going forward. This is Edmund Shing from BCS Asset Management saying goodbye.